Good morning and welcome back to our Nonprofit Forum series on nonprofit finance basics. This month we'll be covering financial management. Last month we covered a bit on QuickBooks. So this month we're going to be positioning to a little bit of a new topic. We're happy to welcome back Donald Wells. He's been here providing this forum for us for the last few months, and he is our friendly neighborhood accountant. He's been practicing in accounting for 30 years and has extensive experience in nonprofit finance management. He also sits on several boards in Central Ohio, including the Fellowship for Christian Athletes, Social Ventures, Catalyst Columbus, and National Christian Foundation of Ohio. Personally, Donald enjoys working with business leaders and coaching youth in the area. He holds a bachelor's degree with West Virginia Wesleyan College and is a certified public accountant in the state of Ohio. Before we turn it over to you this morning, Donald, I want to give a little refresher on our housekeeping. This forum is being recorded, which means that it will be made available to you by recording after this is over. The folks who are attending today will not be seen on that recording, just the folks in the panel today. If you're interested in closed captioning, please do look at the bottom right-hand corner of your screen. You'll see 3 dots. If you go there, you'll see show subtitles. And if you click that, those subtitles will appear on your screen. You can change the size of the subtitles if you go to subtitle settings. And you can also click and drag those around your screen anywhere you like. The Q&A box is reserved for content style questions. So if you have any questions for Donald throughout this presentation, go ahead and throw those questions in the Q&A box. If you keep an eye on that box, you can like any questions that you would like to hear answered. You can upvote those. If you have technical related questions, for example, about the subtitles, you can put those in the chat box. That box will not be monitored for content related questions, but it will be monitored for technical related questions. And with that, I am happy to turn it over to Donald.
Danielle, thank you very much, and good morning to everyone participating. I will be taking drinks of water for the last week or so. I've been fighting the good fight of cold, so forgive me for that as we begin. I'm sharing my screen, and hopefully everyone can see it at this point. So just a couple of things to get started here. First and foremost, let's everybody thank the Columbus Foundation for investing in this forum. Not only this forum, but the other forums that are taking place. I spoke with some folks at the Columbus Foundation, and I really wanted to congratulate them on putting forth and making this investment into the not-for-profit community. I mean, this is a great investment because it allows the not-for-profit community, even if they don't necessarily pick up all the technical details that people are giving, it just makes them aware so that you know when to ask a question. So I'm really thankful to the Columbus Foundation and Danielle and everybody on her team for making the investment in doing this. I also, and I don't know if he's on the call, but I also want to give a specific shout out to Thel Robinson. After the last forum, Thel and I met. We went through QuickBooks as far as a training process, and we talked about classes and tags. And Thel was having some limitation issues with tags as far as what they could do for him. So he called me, we talked through it. And the unfortunate part of it is that he was 100% right. What he was trying to do could not be done with tags. So we were able to advise him on how to work around it. But I really appreciate that as being a great example of somebody who took the information, went back, and then said, yeah, I'm still not getting this to do what I wanted to do, and then reached out for a quick phone call. So Thel, thank you for that, and thank you for allowing me to use that as an example. The last thing is that I know that the Columbus Foundation does surveys. Please take a few minutes to do those surveys. It's really beneficial to the foundation, not only so they know whether or not I'm providing you the content that you're interested, but it also lets the foundation know what you need going forward. So please, please, please take the time to complete that survey. With that being the precursor, we're going to get into the presentation today on financial management. And let me see if I get my slides to work. There's me again. Yay. Financial management. What we're going to do from this standpoint is we're going to talk about what nonprofit leaders need to know about the financial systems that are at place. Over the years, I have created a document, and I think the document has 43 items on it. 43 items that when you look at the IRS, watchdog agencies, and the accounting rules, there's 43 items of continual improvement that I highly recommend that people look at. A lot of those 43 items are in this presentation. I've had a couple of organizations ask me for that list. I'm hesitant to give that list out in one big bite because I think it becomes overwhelming. So let's start with the items that are in this presentation. And then once you feel like you've mastered these, you can always come back to me and get the other items. This presentation has been built around, hey, first things first. Let's make sure that we take care of the most important things first. So that's the kind of the precursor that I'm going at this with. Hey, here are the things that we need to make sure we have in place. The presentation you'll find is it is broken up between the Form 990, which you'll know that I go back to that all the time. It's got some governance in this, so we take care of the Ohio Attorney General a little bit. We also have some GAAP, some general accepted accounting principles. And I know this is probably the hardest place for most organizations. And then we go to the watchdog agencies, and we use the Better Business Bureau because it's very easy to get their listing of what they're looking for. So I use them as the watchdog agency in this process. So as we began, and this is just going to be a bunch of lists. And I don't know that you need to take a whole bunch of notes during this presentation. But what I would like for you to do is when you get these slides, to go through them and use it as a checklist, whether or not we have these policies. There's a couple of, and I'm going to give a quick summary of each policy that exists because I want you to have an idea of it and a concept of it. Do you have a policy regarding when you should stop destroying documentation? This is a required policy by any organization that interacts with the Internal Revenue Service. It has a really bad name. It's called the document destruction policy, but it's really about when you will stop destroying documents. For folks that are old like me, and you remember Enron and all of those things that happened, folks would hear about the feds coming into the office, and there was a mad rush to the shredder to get rid of documents. Well, now they've said you must have a policy of when you will stop destroying documents. It's a canned policy. It's a very legally worded document. You can Google it and get an example of it. Also, any of the policies that I'm talking about right here, if you need an example, someone in my office will be able to provide you with an example of it. The other policy is a whistleblower policy. Even if you are a one-person organization and you have payroll, I'm sorry, let me take that back. Even if you're a one-person organization, you should have a whistleblower policy. The whistleblower policy and the document destruction policy both came about through Sarbanes-Oxley. Sarbanes-Oxley says that if you interact with the IRS, you must have these two policies. All the nonprofits interact with the IRS by filing a 990 or 990N. So they have backdoored their way to every organization should have these two policies. So if you don't have these, please, and you can get them through the Google machine. You can Google them. We have access to sample policies, so you can always ask us. You can, if you have an attorney or another accountant you work with, you should be able to get them from those folks also. A conflict of interest policy. This is very important. I have seen organizations that have a policy and on the top of it, it says conflict of interest. The reason I use the Form 990 in this instance, and again, this is hard, but if you go to the Form 990 instructions, it tells you very specifically what that policy should entail. And about 40% of the time, the policy that I see that my clients have does not meet the requirements of the Internal Revenue Service. If you have a conflict of interest policy, generally speaking, that is much shorter than 3.5 or 4 pages long, it's probably not meeting that requirement. So that's kind of my push to you. If you have a conflict of interest policy that's about a paragraph long, then it's probably a great start, but it's probably not a policy that would meet all of the requirements. So just make sure that you're taking a look at that and that you don't blow past that. How it is enforced is usually the piece that's missing from the shorter policies that we're seeing, how the conflict of interest policy is enforced. A formal procedure for determining salaries. This is really hard. Let's say you're a 1 or 2 person shop or even a 20-person shop. Do you have a process for determining salaries? Your board should have a process where the executive director gets reviewed. If there's other key employees, then that person should be obviously reviewed on an annual basis. There are tools that exist. I know that I use a tool from Robert Half. Awana has survey tools regarding salaries. I believe the United Way has a survey tool. There's tons of tools that you can look at to determine whether or not the compensation for your key employees are in line. And that becomes your formal procedure that you would do. The hardest thing about some of these procedures is that it needs to be written. So we're going to keep going through that. A formal procedure for the review and approval of the Form 990. Most organizations will have a policy where they will review and approve the 990. Just make sure it's written, and that's pretty simple. I feel like I'm just giving you a list, so I apologize about that, but this is the nuts and bolts of what we need to know. Financial reporting. This is the way that I would ask the question. How do you know your financial statements are done? How do you know that they're good to give to someone? What are your processes, policies, and procedures for determining that your financial statements are done? Like you should have, if we were to go to Amazon or even the Limited or Huntington National Bank, they have a process at the end of the month that they go through called the closing of the monthly financial statements. And their process might be 8-10 days long. I don't expect that your process is 8 to 10 days long, but there should be a couple of key things that have to happen before you give your financial statements to someone. Most simplistic thing is that the bank account should be reconciled. And then you yourself probably should go through it to make sure that you don't have any questions about it before you start handing it out, or maybe even your board treasurer. but you should have a policy and a procedure that allows you to determine that your financial statements are complete. Forgive me. I think that is the third time that I started to say you have to. I don't ever intend to say that you have to. You should. So forgive me for that. That is a slip up, and I'm trying to make that change in my presentation and my discussion about things that you have to do, because you don't have to do any of these things. These are just recommendations and best practices. So if I slip up again and say that you have to do something, just forgive me. Know that what I'm trying to say is that these are best practices and things that you should be doing. How do you differentiate between contributions and fee-for-service transactions? Who makes that determination, and how does that get communicated to the individual in charge of financial reporting? This is a new thing. This is a big deal. This flows through a lot of different matters and issues. In the not-for-profit space, we truly have two types of transactions that exist. There are contributions, or there are fee-for-service, or what's called exchange transactions. And I know that sometimes we'll say, oh, well, but what about grants? Well, grants are either contributions or they are what's called exchange transaction. Exchange transaction is where someone is paying you to provide a service. The old terminology was fee-for-service. It's really important that in our financial data that we differentiate those two transactions. Why is that important, Donald? Because those two transactions, one, they get accounted for differently. So if you start to roll into an audit, those transactions get treated differently from a financial statement presentation standpoint. The other reason that, and probably one of the most important, more important reasons, is that it impacts and it shows up, those two transactions impact and show up differently on your Form 990. We're going to have a later conversation in this series about the details of the Form 990, and particularly Schedule A. Those transactions, accounting for those transactions properly, have a tremendous impact on Schedule A of the 990, which has a tremendous impact on whether or not you pass a public support test. There's a lot of detail there. I promise you that we will get to that when we do the Form 990 conversation. I believe we're going to spend a full forum on the 990 and on Schedule A. So just know that you, as an organization, you should be able to know the difference between a contribution and exchange transaction, and they should show up differently in your internal financial statements. Donor restrictions are being monitored. How does that happen? How do you know when you hit a satisfaction of a donor restriction? If a donor gives you money for a summer camp, and they say to you, hey, this is for summer camp, and I wanted to provide services for 25 students. So you should have record of summer camp took place and 25 students attended, right? So that's the kind of way that you should be able to do that. The question that you will get into is, okay, it said 25 students, but there were only 22 students. Did we satisfy that donor restriction? That's a complicated issue. I would say that you probably satisfied some of it, not all of it, but that starts to speak to your policy. I know that I do have a client who has created a policy that said that, hey, if they said 25 and we got to 85% of that number, then we consider it satisfied. That's their policy. So now we can quibble over whether or not that's a good, bad policy, but that's their policy. So everyone is functioning under that standard. What procedures do you use to monitor budget to actual reporting and results. We talked about this last month with QuickBooks. If you're not looking at budget to actuals, then you're probably not doing a holistic job of managing the organization. One of the things that I am seeing more and more is that organizations do a pretty good job of creating a budget for their programmatic purposes. And a lot of times we have to have a budget for our programmatic purposes as we request funding from grants or from family foundations or private foundations. But there's a whole nother element to the organization. Not only does the organization have programming activities, but they also have administrative activities and they have fundraising activities. Are we creating a budget for those activities so that we have an organization-wide budget? So when we start talking about budget, we're really looking at it in three parts in the not-for-profit space. This first one, how do you allocate costs between program administration and fundraising? This is becoming more and more critical that organizations have a methodology to determine how much of a expenditure is program administration and fundraising. Your 990s are public. Funders are using your 990s more than you ever know to try and make determinations about whether or not they will fund you. If you don't have the capabilities of allocating those costs, really get with somebody to have them help you figure out what does that really mean, so that I can make sure I'm producing the financial data that's necessary. We talked about this in a great deal of detail last month. If you didn't hear last month, I highly recommend that you go to the Columbus Foundation YouTube page. We spent a whole lot of time talking about how to get this data out of QuickBooks. So I just want to reiterate that that's really important. The reason that it becomes important that you allocate costs, and I'm just going to use a very high level example. Let's talk about rent that you have at a facility or that you're using or an office space. For most of you, a portion of your office space is used for programming, administration, and fundraising activities. So that rent should get split or allocated among all three of those. If I see a rent category that's all going to programming, I know well enough that, okay, they don't have an allocation. So it's one of those things, or even if I see it all going into administration, I know they don't have an allocation method. So it's one of those very easy things that a user can look at to say, okay, they don't have this. So work hard. It can be extremely complicated. We try to make it easy for folks. Get with your accountant, get with whoever performs or prepares your Form 990 to make sure that you have a good process in place. In-kind contributions, I think we talked about this last month also, so I'm not going to go back into this a lot. We've got in-kind contributions and we have contributions of contributed services. Two different things. Again, probably if you weren't with us last month, I'd love for you to take a listen to that. I'm not going to go back into that for the folks that were present last month so that you don't have to hear it twice. Do you maintain cash or accrual accounting? You will hear a lot of accountants say you must be on accrual accounting. I'm not one of them. I tell people all the time, I'm a little different. I work a little differently. What I want is I want you to produce reporting that allows your board and you to make good decisions. If you have an audit and if you have financial statements to go out to the public, they must be on the accrual accounting method. That's a requirement. However, internally, if everyone manages cash better, then that's what we should work on. What's the difference, Don, between cash and accrual? I'm going to do this very quickly because I'm going to guess that several people know, but I'm going to go very quickly. Cash is your checkbook. Cash is money came in, money came out. It's your checkbook, which is why I truly have organizations that are $3 to $4 million that maintain a cash basis internally, because that's what their board is used to seeing. So that's why I can't say it's wrong. Cash, accrual accounting. Accrual means you're accounting for things either when they took place versus when money was received. Let's give you an example. Let's say that you make a request to the Columbus Foundation and you receive notification that you have a grant that's forthcoming. Well, in the accrual accounting world, you would record that in your financial statements. In the cash accounting world, you would wait until the check is received and deposited. So there's a timing difference. That timing difference becomes vital at year end, especially if you're going to do forward-facing or public financial data. Hopefully that made some sense. If not, I'll try and clear it up with questions at the end. I'm not going to read all of this to you. You'll have it, but I mentioned that we're going to cover off on some governance things for the Attorney General. And the first one becomes vital. How does the board know that the processes are working? That becomes really important. And that, in a nutshell, is the legal responsibility of a board. At the Ohio State University, the board has that same responsibility as they would a rescue shelter with 2 employees. The board still has that responsibility of knowing that the processes are working well. It's just a matter of how does the board determine that? A lot of conversation around that, a lot of details around that. If you have specific questions, I'd highly recommend that you probably reach out to me outside of the forum. Hey, Don, we have this. What do you have any recommendations? I will tell you, I have one organization as a client. They do about $7 million, and that board every month receives a report of every check that went out so that they can look through the listing to determine that the vendors all make sense. So when we start talking about what works for you, it truly becomes, what does your board need to determine that the processes are working well? The middle item there, what processes do you have determined that your credit card, your donor's credit card is safeguarded? What processes do you follow to safeguard your donor credit card information? Man, this is more and more just vital. And I hate to say this, but I was watching 60 Minutes a couple of weeks ago, and they were talking about how it is possible for one country in today's environment to take another country off of the World Wide Web. And we know that cyber attacks are taking place. We know that they're active. We used to think as an organization that we were below the threshold of interest of anyone. But what I'm starting to learn more and more is that the smaller you are, the more interest they have because the ease of entry. So please take your cybersecurity serious, and this becomes one of those places that's vital, that donors are trusting you. And I know that for me, my clients trust me with some sensitive information. It is always a fear of mine that we're going to mess up with that information. So we work very hard to continuously make sure that we're safeguarding that data very well. So seriously, please take that serious, even if it's just you in an office. Take that very serious because you have some very vital information. So the last two items on this list is where I'm going to focus. If your organization has a credit card, do you have a credit card policy in place? This is something that really is interesting. Back in 2018, there was a House bill in Ohio, House Bill 312, that put specific procedures legally in place for governmental agencies to follow regarding credit cards. In 2008, I thought that House bill would roll very quickly into the nonprofit space. It has not. I still would expect that to roll into the nonprofit space. So you can look at House Bill 312 to get some ideas about maybe how a policy could be created or what a policy would need to be in, would need to include. But I recommend that you have some type of policy regarding credit cards, where they're stored. How do you know who has them? Do people get to have them all the time? Are they under safe? And do they have to be signed out? Are receipts required for the transaction when the credit card is brought back? All of that type of information becomes very critical. Petty cash. I used to be a stickler for petty cash, and I will tell you that as an auditor, that is the one area that I can look at and in 30 seconds determine whether or not we have a problem in the financial statements. Petty cash is a wonderful practical way to handle a lot of transactions. We have to do it well and we have to do it right. So please make sure that you have policies and procedures around it. A real quick story for you regarding petty cash. I was doing a engagement probably 25 years ago for a local business, and they wanted me to look at their petty cash fund. They maintained about a $500 petty cash. But what we saw over a 12-month period is there was about $500,000 that ran through petty cash. So we call it petty, but $500,000 was not petty. So make sure that you have great policies and procedures around that petty cash. Some people may call it cash drawer. Some people may call it the cash that we keep in case we need something. But all of that is what I'm grouping into the petty cash conversation. Oh, forgive me. So I mentioned that there's several watchdog agencies, and what I've pulled off on the rest of the slides are I believe there's 21. 20 points of the Better Business Bureau, what they consider as they go through and evaluate an organization. We're not going to go through all 20, but I am going to stop on just a few so that we can talk in detail about them. I recommend as a point of differential that an organization become Better Business certified. I truly do. But I also recommend that you don't start that process until you know that you can complete it. Use this information to know that you can complete it. Because the only thing about the Better Business Bureau, personal opinion, that I don't love is that if you start the process and you don't get all the way through it, they will label you as, I think the terminology is did not provide information. And I would rather not have that label associated with an organization. So that's just my personal opinion. So there's 20 standards. We're gonna go through them. They're not easy. They're not easy. And the first time I looked at the standards were probably 5 or 6 years ago. One of the things that struck out or stood out to me was Lance Armstrong's Live Strong. If you remember Lance Armstrong, he was the bike rider, had a lot of issues, but he created a not-for-profit for cancer, and everyone had the yellow Live Strong bands that they were wearing. At the time that I looked at this 4 or 5 years ago, that organization did not meet all of the standards. And I usually like to tell people that so that you know this is not easy. This is not a slam dunk. However, it is a place that you can go to start building your financial management systems, and you can start to evaluate, hey, do we have the information that we need to have to run a great nonprofit? Forgive me, a little hard to read, maybe for your screens, but when you get it in writing, it's much easier. I am going to just point out a couple of different things on here. The Better Business Bureau in point 3, they require 3 evenly spaced meetings by the governing board throughout a year. I think, and I could be wrong, so don't quote me on this. I think the Ohio Attorney General would tell you that they like 4. And I may be able to look that up, but I believe that is to be accurate. The board size in item 2, the Better Business Bureau likes to see 5. And always an odd number so that when you vote, there's a win and there's always not ties in your voting. So that's why they're looking for an odd number. The one thing that I will point out here is that board compensation, they do not mind you compensating your board. Most organizations don't. I don't know that that's a great practice to be in because I think that as you compensate people, it negatively affects some of the items on your Form 990. Again, they want a conflict of interest policy, and they go through and they tell you some of the language that they're looking for in a conflict of interest policy. These are difficult. An effectiveness policy and effectiveness report. In our world, what we like to do today is we like to call this the organization's value proposition. So if you have a value proposition, why do people donate to you? Why do people support you? Why are you doing what you're doing? Then you can take that value proposition and create effectiveness out of it. And the Better Business Bureau is looking for you to have not only a policy regarding how do you go through and assess your effectiveness, but they're also looking for a report about how do you perform and assess your effectiveness. So if I'll go back to the after school program because I think that that's one that is pretty easy for my head to get around. Then we know that after school programs, what we're hoping to do is engage students so that they can get across the finish line and graduate high school. Well, we know that when someone graduates high school, their earning potential is more than if they do not graduate high school. And we also know that there's other societal impacts of graduating high school versus not graduating high school. So my effectiveness report, if I was a after school program, would talk about, hey, out of the 20 students that were in our course, 18 of them graduated high school, and that created this lifelong impact on our society. I think that starts to speak to the effectiveness of your programming. And that's just one example. I'm sure that you all, as the program people, have much, much better examples. I'm just an accountant sitting in the room. We have, again, the program expenses. A couple of years ago, an item 8 there, a couple of years ago, the Better Business Bureau dropped that percentage from 80 to 65. There's always conversations around that percentage. Different watchdog agencies had a different percentage. It was great to see the Better Business Bureau move it from 80 to 65, because that starts to incorporate the fact that we do need to make sure that we're compensating our employees well, even the ones that aren't necessarily client facing. And we also need to build capacity so that when the opportunity comes to expand, we have that ability. So that was a very nice move by the Better Business Bureau, in my opinion. Accumulation of funds. If you don't go through an audit, this is something that you will need for an audit. If you do go through an audit, I expect that the audit standard is going to tighten this disclosure up. There's a disclosure in audited financial statements called liquidity and availability of assets. The original intent of that disclosure was to highlight organizations that were accumulating dollars and not necessarily putting them back into the programming, or were I don't like this term, hoarding cash. So the original intent was to say, how much cash do you need on hand to run your operations? How much cash do you have? If you have excess, what's your plan? If you have a deficit, what's your plan? Most of the disclosures that you see today just says, how much cash do you have on hand? It doesn't go into the plan part. And if you look at the standard, I believe that the plan part is in the standard. What's your plan? I expect that we're going to see the governing bodies come back and really hone in and make that a very clear requirement in our financial statements. Because without that piece of it, you really don't know whether or not folks are just accumulating cash to accumulate cash to build a bigger storehouse, or whether or not they're accumulating cash because they're doing a program expansion in a couple of years. There are great reasons to be accumulating cash, and we just have to tell our story. I think that either the next forum or the forum after that will be financial storytelling. So we're building each time. Last time we did QuickBooks. Now we're doing, okay, when you have your QuickBooks system, what data do you want to get out of it? And then what data do we need to tell our story will be the next session. Audit reports. The Better Business Bureau requires an audit of certain organizations. Again, that's why I think it's very important that you know that. The state of Ohio does not today require an audit for nonprofit organizations. Audits are getting to be very expensive. So even if you're above the threshold or someplace in the threshold, just know that, I know that I may need to have this if I want this certification. That's one of the reasons I'm like, don't necessarily just jump in the certification pool, because you'll spend some money to be certified that may or may not always be of a tremendous benefit. A detailed expense breakdown. What they're talking about here is the statement of functional, which is also in the Form 990 that we looked at last year or last month. An annual report, which is very different than an audit report. So an annual report will primarily just talk about the amount of money that we generated, how we spent the money, and give us a phenomenal opportunity to express our effectiveness and or our value proposition. So that annual report becomes very important for a lot of organizations and a lot of agencies. So Danielle, I think that I am wrapping up. Yes. And the next form is the 24th with any questions or comments. So I feel bad because I feel like that was list after list after list. But hopefully the takeaway when they get the slides will be a working list that the organizations can use.
You know, what I love about it is that, yes, it was a list, but it's easy to follow with regard to the fact that everything's right there. When we send it out, you'll have the list. It's also easy for folks to follow along on the screen. So no problems there. And we have some questions that are being generated in the Q&A box. Now is a good time for you to throw any additional questions that you might have for Donald into the Q&A box. We already have one comment that says, "Thank you. The list is on point." So I think it's much appreciated. I want to start out with a question that I even had, but that folks had here in the comment section around, we talked about when you stop destroying documents, what the rules are around that, but when do you start destroying documents?
Great question. So generally speaking, you should never maintain any document more than 7 years. So if we say, okay, that's the absolute maximum. And that's usually for payroll type information, because that's what the IRS is after, payroll information and financial statements. So 7 years maximum on that. When you get into things like invoices and receipt, usually if you can get a year or 2 years with that type of information, you're in good shape. What I would highly recommend you do is you can either, usually if you have a payroll service, they have a document retention listing that you should have. If you don't have a payroll service, you can Google it. You can ask us. But I would highly recommend that as an organization, you put in place a record retention policy about when you will start or when you should destroy information, so you know when to get rid of data. Like for me, in our firm, most of our clients have a requirement that we keep things for 7 years. So that becomes our standard.
Okay, and so I think the gist is that when you're starting out, and Donald, correct me if I'm wrong, I'm trying to make sure we get to the heart of the question. If you're starting out a nonprofit, you should be sort of starting to collect the documents immediately as soon as they're acquired, and then deciding based on this policy when you are going to destroy those. So start right away. As soon as you get a receipt, as soon as you get any document, figure out how you're going to save it. I'm going to make a wee bit of a plug for the forum that's coming up later this month, because it's all about document management and information management in an organization. So it goes into a touch into finances, because we left that to you, but it also goes into just in general how to keep up with your documents. It's called Getting Organized, Getting Your Organization Organized, the Value of Information Management. So keep an eye out on that as well.
Yeah, and I'm very hopeful that they will have the same type of time frame, so we're not giving you two different time frames, but that's a really good forum, because the opportunity to say, you're out eating or something and you're with a client or with somebody, the opportunity to say, do you want your receipt? No. that opportunity is now gone. You always want the receipts.
Yes. All right. And so we have, we're generating some other questions. At what point should a small nonprofit seek a business credit card?
It's a hard question. My initial gut reaction is as soon as it's feasible. Here's why I'm struggling with that question just a little bit. I would have told you 3 years ago that you probably don't want one, but I was just at my bank and we were talking about this situation, because if you pay things with a debit card or ACH, or you let people automatically draft from your bank account, they have entry into your bank account. If you pay with a credit card, they have entry into your credit card. Very different. So believe it or not, in the world that we're in today, the credit card creates a little bit of security, a little bit of a distance between that person on the outside and your financial assets. So that's why I'm struggling with that reply a little bit, because I'm still tossing around in my head that new piece of information. We've been in business for 6 years, and we just got a credit card 2 weeks ago. But the reason we got it was this conversation with our banker. And we now use it to pay most of our vendors, to prevent them, instead of using bill pay or ACH or anything like that, or a debit card, which is what we were doing. We've now created a little bit of buffer between the data they have and our assets. So if they have a data breach, someone has access to our credit card, not our cash account.
So that was a really timely and relevant question for you then, Donald. We got the real time working through of the answer to that.
That's right.
So our next question is, what are the pluses and minuses of contracting out for bookkeeping versus doing it in-house?
The minus is that it costs you money. All right, so let's be very clear about that. The other minus is that depending on who you contracted with and how you contracted with, you may not be able to get an immediate response all the time. The plus is that you should be getting a tremendous amount of more expertise. The plus is that you get to add another person to your team, so that you get another voice to speak into you and the organization. If it's affordable, and I'll say this, if it's affordable, I recommend you do it. However, I recommend, and a lot of our clients that outsource to us, I'm now trying to get them to hire a person internally, because that will allow them quicker response times. So outsourcing is good, but I want you to think about it as a temporary solution instead of a permanent solution.
That's really helpful. I think that this continues to be a conversation for our smaller and even mid-sized organizations around when you make that transition. A lot of our small organizations are really in the phase of needing to do it themselves, because even the contracting out can be out of the reach. What can you talk a little bit before we move on to this question, what that process looks like for a nonprofit of transitioning from doing it in-house to contracting out or hiring a professional?
Yeah. So let me ask you to clarify, when you say the process, do you mean what the the nuts and bolts of it, or what the not-for-profit should not be afraid to ask for, or both?
Let's go for both. The
Okay.
intention of the question was kind of like, what sorts of things do you need to be ready for if you are going to be making a transition?
Yeah. So one of the things that I think that you need to be ready for, hopefully you outsource to a good person, and there's a lot of good people in town. You should be ready for them to ask a lot of questions and to challenge you, because they're going to want to move you to more of a compliance and the detailed reporting. You're going to probably, one of the biggest things is that you're going to probably be, and I know that so many people do this already, you're probably going to be asked to either create some user access for that person so that they have access, and you want them to have access because all the softwares now are capable of letting you know when somebody was active, when they weren't, so that if something goes wrong, you can kind of point it back to an individual. So you're going to want to give up a little bit of access to some information. You're going to want to be ready to answer some questions. The nuts and bolts of it really shouldn't be that complicated, because in our situation, once we get access, nothing really changes. Your process still becomes the same. You still have to gather that documentation. Now you just have to share that documentation with us. So your processes don't change very much. Regarding what you want to ask for the moon. Absolutely, ask for absolutely everything. You are the client. The client defines quality, and the client defines good service. So never, ever, ever be afraid to ask for something. I have certain clients where we're starting to engage with them where they don't have access to their data. They gave everything to someone else, and they never asked the question, hey, when we want to end this relationship, how do we get out of it? So ask everything. These presentations, this listing would be a great interview tool for you to take to a potential outsourced person. Hey, can you do this? Can you do this? How can you help me with this? Those become very important questions.
I think we could probably do an entire forum on, how to hire a person for this role. And I just want to say that I know that you think the transition should be easy until you see the number of shoe boxes under my bed of paperwork that we now have to wrangle. So good luck with that. We have another question around, is accrual accounting better than cash accounting or other alternatives?
Better. I say the best method of accounting is the method that you and your decision makers understand. Accrual accounting is the standard that's accepted in the United States. It's called US GAAP, Generally Accepted Accounting Principles. Accrual accounting is the standard. So that's why when you go outside, or when you produce a audit report or a financial report for the outside people, it needs to be on accrual, because that makes it very comparable. Better, I wouldn't say it's better, because I know very, very, very intelligent people that struggle to understand accrual-based financial statement. So better is whatever helps you and your board make decisions.
Thank you for that. And for the folks that are still on the line, if you want to throw into the chat side of things, if you want to hear more about cash versus accrual accounting, maybe we can get something together with Donald to go into that in more depth. All right. So a question here kind of harkens back to our previous forum. If all documents are scanned and entered into QuickBooks, do the paper documents still need to be kept?
No. No, and I think you'll hear that next in the next form that Danielle was just referencing. Once you have the documents electronically, oh, you have the documents. So the key is, do you have them? So no, once you have them scanned in, there's no reason to maintain paper.
Yeah, and actually the next form will kind of address that. Once you get it scanned in, how do you protect all of that digitized information that you have? All right.
Yes, please protect it.
Yes, absolutely. And should we still be asking folks to mail in credit card numbers on forms?
I think that's really hard. That's a hard ask. In today's world, that's a hard ask. I was at a fundraiser last week that was a luncheon, and they gave folks the opportunity to write their credit cards down on a donation slip. That's just a hard ask because you just don't know where that's going to go. You don't know who has access to it. If it's still working for you and your population, great. I think that's getting to be a harder and harder ask, a more difficult ask of people.
So it may not be considered a best practice, even if it's working.
Yeah, because from a best practice standpoint, let's talk about security. How are you securing that? And if you're at a 3-person office, how do you know who's going to open the mail that day? And I mean, you just run into a lot of different issues.
Yeah. So we're gonna try to phase ourselves out of that as much as we can, folks, to make sure we're protecting our information. What's a good policy for keeping receipts? Should I be requiring a receipt for any transaction, even small routine credit card purchases?
So I'm going to answer this question the way I heard it. So if I didn't hear it correctly, let me know. So somebody has a credit card that they're using, and then they're either asking for reimbursement of those charges, or you are using those charges to produce your financial statement. In both of those scenarios, yes, you should be asking for receipts, because as an auditor, if I come in and Danielle had a credit card that she used, and you want to record all of that in your financial statements as expenses or as program money, and there's not receipts for what Danielle spent, I'm going to tell you that what she didn't turn in receipts for needs to be coded as compensation and needs to go on her W-2. So now she's going to pay tax on that. So if I didn't hear the question the right way, please clarify it for me. But yes, even small transactions, if someone is asking for reimbursement, or if you're using a credit card to make purchases, should have receipts.
I think that did get to the crux of that question about all transactions need receipts. All right, and so we have a question about, and I think you mentioned maybe Googling it would be just as easy as other methods, but where can reports be located that are used to gauge if your compensations are in line?
So I believe that, so I use a source. So Robert Half is a placement agency, and I have their salary guide. Oana has a salary guide that they produce for the not-for-profits. And I think the United Way does. I'm not sure about that, but those are the 3 organizations that I know that produce salary guides on an annual basis.
And so this next, oh, sorry, were you going to say
No.
something?
I'm going to see if I can get the right name of Alana. But go ahead.
Okay, somebody just put it in the chat, Ohio Association of Nonprofits.
Thank you.
Association. There's another A, I think, at the end, but you will find it if you Google something like that. So, and the next question is, yes, the list will be coming to you in your email via the slides that Donald put together for us today. It was pulled together in those slides. So just keep an eye out for your email and it'll come there. And the final question, I'm going to do my best to try to understand what the question is, but let me know if I'm getting it wrong, re-ask it and I'll try to get it right the second time. But is there an avenue for nonprofit organizations to come together and share their internal processes with one another, sort of a shared learning and building? Actually, that's a brilliant idea. I will be taking that back for our capacity building programming. Thank you very much.
That is a brilliant idea. And yes, that's a needed thing in the space. So thank you for that. I don't know a cohort or anything like that that currently exists, other than maybe a couple of leadership courses, but those are temporary. So I don't know anything that's long-term and is open to everybody.
Yeah, that is definitely a gap in the sector. You know, when you mentioned leadership courses, and they typically cover a component of leadership, the interpersonal components, but they may not cover the nitty gritty rubber meets the road. But one of the things I really liked about this, this question was this concept of peer-to-peer learning, where organizations have an opportunity to share in a essentially sort of a space together. So I'm going to noodle on that and see if there's any way that I can put rubber to road on that concept. So stay tuned for that. We have one final question for today. And this question is around if you had any advice for someone who wanted to start out opening their nonprofit organization. And I'm thinking that this is from a financial perspective. What advice would you give them? I have a follow-up question for that as
well. So where we will start at a very basic level is to make sure that you have a separate bank account for the nonprofit organization. I would highly recommend that you move to create a system of some sort for your record keeping and record retention. And that can be, depending on where you're at and the size, that can be an Excel spreadsheet, it can be QuickBooks. But we have to know that we're going to end up growing that process. Without a lot more information, that's probably just where I would start, Danielle. I'm sorry, that's so simplistic.
Well, my follow-up question to that is for organizations who may or may not be 501c3 organizations yet. What should they be thinking of around fundraising in those early days, and how do you manage those funds?
Okay, now we're talking. So what I would highly recommend you do is look for a physical agent. Look for somebody that is structured in such a way that they can be your 501c3 while you still grow into it. So what a physical agent does is it gives you a 501c3 to use. They would collect money and they would on your behalf, and they would disperse monies on your behalf. So they become a back office really for your program until it becomes a 501c3. It is a great idea. There are some organizations in town that are specifically built to be physical agents. There's other organizations that function as physical agents. And then there's some organizations that will do it. The organizations that will do it, I would try and stay away from. And the hardest thing about the difference is that the first two organizations will have rules and guidelines and contracts, and you'll have memos of understanding and all that stuff, because you do truly have a legal relationship that both parties need to be clear of.
That's a great answer. And from our perspective, we often give guidance to explore that fiscal sponsorship space before jumping directly into the 501c3 space. Aside from just saving the time of the filing, which can be arduous, it also gives you an opportunity to really test out your model and work with an organization who's already done this. And in one of that, on that spectrum you just mentioned, one of those folks may be good at the mentoring piece that comes with lifting a nonprofit off the ground. So I really like that piece of advice. We only have time.
If I can, I'll go back just for a second. When you especially, and I make this distinction, when people come in my office and they want to talk about starting a nonprofit, what I ask them a lot is, do you want to start a program or do you want to start an organization? Those are two very different things. If you want to start a program, let's go to physical agent part. Let's tie you with that executive director, let you go to their board meetings, let you see what the organization running looks like, so that as you move out of that program to organization, you have a vision. Unfortunately, so many people start these nonprofit organizations without really having a vision of how things are supposed to work. And they muddle through for a long time. I love the program physical agent relationship.
That's really good guidance. And I think I can feel a follow-up question from the audience, particularly those who are interested in starting nonprofits. How do you differentiate between that of an organization and that of a program? How would you guys?
Very good. Very good. So most, and this is what I'm going to say, most people jump in the not-for-profit space because of a cause that's vital to them. I just had a lady who's in my office. She started a 501c3. We helped her get started, and it was around safety on college campuses. She spent a year on college campuses speaking about safety. What we spent time with last week is that, okay, it's summer. There's no college campuses to be on. What are you going to be doing? And she had the right answer. She's like, well, I need to put infrastructure in place. I need to build this. I need to get my board activity. Yep. So that's, you have to have a little bit of a desire to do those things more so, and more so than to deliver a service. Because a great nonprofit, if you start it today, you can't deliver enough service to impact the world at a huge level. So you're going to have to hire people. And when you hire people, who gets to supervise them? You do. Who gets to deal with all of the HR issues? You do. So you're going to be coming. I do not do the same amount of work today that I did 10 years ago. I spend most of my day managing people now. That becomes the difference. I spend very little time like this interacting with my nonprofit clients. So that's the distinction I'd make.
I think that's an important distinction, because the sector that we're in is driven on making the world right in multiple different ways. And so folks come into the sector with that perspective. And so we have to really think through, I have the cause in mind, but I also either have to have the back end in mind, or I have to have the back end satisfied in some way so that I can focus on the cause, which is where our fiscal sponsorship can play a role. I'm going to beg to keep you for just a few seconds because we got an excellent question in the chat box that I'd love to end on, if that's okay.
Sure.
The last question for today is for organizations that did not start out with solid financial processes, what are the most important and pressing things to make right as you grow?
That's a great question. So let's assume that it started out really rocky, where we don't have a bank account, we haven't been keeping track of anything. So for that organization, I would say it's the same as the new organization. Let's separate a bank account, let's create a system. Because every organization has to go through those first, 5, 6, 7 steps. So whether you're 10 years old and you haven't done the 5 or 6 steps, or you're 2 years old and you haven't done the 5 or 6 steps, you still have to do them. So we get to creating a bank account, we get to making sure that we have a board in place, we get to making sure our board's meeting, we get to making sure, one of the things that's really odd, making sure the executive director has a job description. Making sure that you have a system for your record keeping. So I would go back to some of the items in this listing, and again, just start with low-hanging fruit.
That's helpful, and in addition to the list, you're going to be getting your email. If you visit the Columbus Foundation's YouTube page, we actually have a playlist of these forums that have covered a few of the topics on that list in more depth. So that's another resource for you if you are looking to build up your infrastructure. So those are all the questions for today. And in fact, that is all the time we have for today. Thank you so much, Donald. As usual, it was chock full of valuable information. Folks,
thank you, and thank the Columbus Foundation. Thank everybody for participating. Please complete the survey. Please.
Yes, as Donald said, we'll be sending out a survey at the end of this presentation. It will include in the email the survey, a link to this forum so you can watch it again if you'd like, and also Donald's slides. So keep an eye out in your inbox for those things, and please do complete the survey. Join us again on the 19th for our next upcoming forum, which is getting your organization organized, the value of information management. You'll see some correlations between what was discussed today. And with that, thank you everybody for joining us. Have a good one.
Thank you.